And our next guest, he knows a thing or two about those black swan events. He's the author of the book with that very name. And he actually spotted the financial crisis in the US in 2008. Of course, he's also the author of Anti-Fragile. He's a former options trader. He's a risk analyst. He's an essayist. He wears a lot of hats. It's great to have him here. Nassim Taleb, welcome. What an honor to have you here. Fantastic. But I'm really hoping that you're going to tell everyone in this room, businessmen, entrepreneurs, politicians, and myself, that there's not another black swan-like crisis around the corner, right?
Okay, so the first thing is, let's redefine what we call black swan, because there are a lot of things that are white swans staring at us. And effectively, for example, COVID, in the black swan, was described as a white swan. That pandemic. Why? For the same reason we should be worried in the future about similar type planetary events, that we're very, very connected today. I mean, the reason I'm here is because of connectedness. So if I take an island and I look at the ecological diversity per square meter, it's going to be high. Much higher than in a continent. But if I open that island to a continent, then you're going to have lower diversity and winner-take-all effects. That manifests itself in economics. You know, the Harry Potter effect, planetary. So you have winner-take-all. Like, for example, if you look at the income of an opera singer before TV and after TV, you realize that probably the income about relatively the same. But 10 opera singers make 90% of the money.
But that would apply to, let's say, AI at the moment. Winner takes it all, right?
And it's winner take all. So we're moved into that environment for viruses and biology, for wealth, for ideas. Few ideas dominate the planet. We're too connected. But it's not a problem. It is a problem if you don't know it. It is a problem if you don't base your systems on that.
Mm-hmm. But this audience here and the business world at large, they've been dealing with so much. And I think they'd be forgiven to think that the crises that are hitting them are coming at an accelerating speed. Is that true, or is that actually a misconception? We've always had crises all along.
So the whole thing, I mean, you can figure out who's vulnerable to the world, you know, new properties, which is connectivity, more tail events. Someone with a lot of debt. Someone over-optimized. A lot of, you know, if you go to business school, they teach you about optimization, okay? Just be efficient. And there are efficiencies, and there are what I call pseudo-efficiencies. And you can figure out who's not really efficient. Like, for example, if you want to try to save money by having everything about outsourcing everything to one company, and that company happens to be in Wuhan, you're going to make more money than your competitors until there's a problem in Wuhan. So that's pseudo-efficiency. So you can figure out someone is more diversified, a company is more diversified in suppliers, that company will fare better. The other thing that's actually will please the audience, and I'm not known for trying to please the audience, is that if you're a middle-sized company, you fare a lot better. And this is pretty much what I discuss in Anti-Fragile. It's a notion of scaling. An elephant is more efficient than a mouse. It looks like a mouse, it's more efficient metabolically. But why is it that we don't have that many elephants left? And mice, there are more mice in New York City than voters, all right? So, I mean, you know, they multiply. Because you throw a mouse out of the window, I mean, you can't do it really, this is a thought experiment. But if you throw, it will laugh at you. But an elephant falling from here will never recover. So why? Because as you get bigger, you're more fragile to shocks. And this comes from isometry. This is why we don't have dinosaurs anymore, but we have a lot of insects. It's the same thing applies to companies. They are economies of scale up to a point, but as you get larger, there are more fragilities. So if you're a mid-sized company, you probably will survive, will do vastly better in a crisis. Maybe even you can take business away from fragile companies so you thrive compared to large-scale organizations, for example. And the same thing applies to political systems. Centralized systems tend to break down. So in anti-fragile, I keep talking about Switzerland as the ideal country because it's bottom-up, or it was bottom-up, I guess,
but
last time I
you've heard
checked.
about federalism, right?
Yeah, it is. I mean, the canton system, it's bottom-up, you have a lot of noise, and you don't depend on the president. The president was here, but I guess, if you ask people randomly in the street who's the president of the United States, they would tell you, and you ask them who's the president of Switzerland, they would hesitate in Switzerland. So it tells you it's self-governing. So decentralization helps. City-state system works a lot better than top-down. And the top-down, coming from EU is probably a little bothersome. So if you have debt, it's bad news. If you had debt and no growth, worse news. So we know which countries are more vulnerable than others today. Sorry, go ahead.
Switzerland doesn't have a whole lot of debt.
Has much less debt than debt to GDP. It depends how you compute GDP to federal. Is very, very low compared to, and it's not linear. Like if you have 100% debt per GDP, it's 10 times the risk of 50%.
Growth, I guess Switzerland could do even a little bit better. But I'm trying to come back to the frequency of crises and what's hitting us and how businesses can really adapt to that. Is there any way, a right way to adapt? You just told me that bigger isn't always better.
Yeah.
Diversification, we always hear that's the golden rule. De-risking is right, but decoupling isn't the right thing. And there's certainly a cost to diversification, isn't there?
There's actually, no, there's a lot of people think it's a cost to be diversified in outsourcing, diversifying with respect to the supply chain and with respect to your customer base. People think it's a cost. It's like saying insurance is a cost. You see, it is a cost until it's not a cost anymore. You see, so a lot of companies who were less sensitive to the choke points in the supply chain fared very well. So the way I best describe the world, since we are sitting in a very large room, is imagine a large movie theater with a narrow door, and most of the research focuses on the size of the theater rather than the size of the door. So this is the big problem. After I left trading, I decided I was not a good tennis player, so I didn't know what to do to retire. I couldn't play chess, I couldn't do anything. So I became a university researcher and university professor. And I realized a few things, that a lot of the university research in finance and economics isn't quite adapted to modern mathematics and to the real world. We live in a complex system. So you got to look at things with a different viewpoint from the traditional linear stuff in it. Now you're asking me, is there a frequency to crises? Well, I mean, no and yes, okay? In the sense that they come, the 100-year flood occurs every few years, okay? And you have new tail events in areas you don't expect, like it came with respect to COVID, it came with COVID, and then came with unexpected inflation, a lot of things. But typically, yes.
But we're trying to figure out what these tail events are, and we're trying to figure out how do we best prepare for them. Anything that you saw on here, the geopolitics, whether it's a trade war.
Okay, so geopolitics, a lot of people, and I have a rule, if you have any reason to buy an option, don't buy it. Okay, why? It's already in the price, and don't worry. Everybody's talking now about tension and war with China. Now, granted, people in Washington are known for not being very rational, okay, and not connected to the properties of the system. But that's the biggest risk people talk about is World War III. And I think that the Chinese are quite rational, and the system is quite rational to prevent that for a simple reason. If you're in the United States, this would be made in China. The chair will be made in China, the table made in China, the screen made in China, this is made in China. What would be, some stuff would be maybe the watches on, the expensive watches
they're
would be
made in Switzerland.
Yeah, but so how can you have a war with a country on which you depend for supply cheap goods and a country that depends on you?
So it's not going to happen, you say?
I mean, people who do geopolitics don't quite understand that it's the system that decides, not them. To give you an idea, to tell you why it's a system that decides, Donald Trump was the president of the United States, the most right-wing president we've had in years. When COVID came, he had the first ever socialist move, which is to give universal basic income. Why? Because the events decided on the move. So I think that I still am optimistic that people would react to economic results. I mean, think about it. If we have a slight little problem in a dock in Baltimore, the price of some inflation goes up a point. Okay? So think about the effect of a war.
So basically, you're telling me that we shouldn't worry about politics too much. The market will take care of everything. It's somewhat hard to believe in a world where industrial policy and protectionism is really the driving force. But I want to move on to politics still having a very important role in conflicts that economics have nothing to do with. It's about ideology, and I'm talking about Ukraine, and I'm talking about Gaza. And Gaza is obviously something that's very close to your heart, and you've tweeted a lot about it.
Yes.
And does policy still and politics still have an important role?
Yes, but then again, it's a local thing, and I do believe that what happened with Ukraine, confrontation between Russia and the United States is based on the fact that Russia, except for raw material, had basically no connectivity with the rest of the world. You see, so they just buy mozzarella from Italy, and then I think they're stopped from doing that after the invasion of Crimea. So, so this is why you can't have the same confrontation with China as in the Ukraine. One thing I wrote in the Black Swan, in the last book, Skin in the Game, basically to describe my work is one volume called the Inserto. In 5 books. Now, why is it 1 book? Because it's easier to write a long book, and then when I'm done, when I finish a book, I know I can continue later. So it's because I'm lazy, rather than put all my ideas together in an organized way. I keep writing, adding to that collection called Inserto, 5 volume.
You just divide it in 5.
Yeah, so the 5th volume, Skin in the Game, I talk about interventionism, basically decision makers. When you have a centralized system, can do things with impunity. They're not harmed by their mistakes. Unlike a mayor of a small village, they live in there that drinks the water. So, and I explained that if you want world peace, you just all you have to do is send the employees of the United States State Department to the beach for a year.
Beach.
And in other words, give them vacation, because basically they try to improve the world and they make things worse, right? And they've been doing that for the last 50 years with impunity. They have great intentions. They're people with great, they have a huge heart, a lot of intent. But the problem is they messed up Libya, trying to help it. They messed up Syria, trying to do democracy. They messed up a lot of places, Afghanistan. So they have no connection to the properties of the system. And that's a result of interventionism, and one of which is Gaza, basically. So what I'm saying is that if the United States didn't give, it's like the relation between Israel and the United States, the relationship between someone with a very large customer. You see, you should never, ever, ever have a very large customer because you're going to be fragile, because that customer one day may retire, go away, have a change of management. So
I'm going to have to ask you, how does this conflict end? Can it be brokered?
I think if you look at things historically, you would realize that the values have changed, and then today we have social media, and they're still not used to social media revealing more information than before and magnifying the pain. Our world is becoming more and more risk averse, and we have more and more respect to human lives. So those involved in decision making concerning Gaza don't realize that a dead person in 2024 is equivalent to hundreds in 1950. I mean, you can look at it. The buildings are safer because planes are safer, so we worry a lot more about human lives. And that's the first thing. And so too, the scenes, these scenes are magnified on social media, something we didn't have before. Mm-hmm. So I think that it's going to harm both Israel and the United States in the long run, because these images are there to stay and maybe multiply even more. So there is a problem, and they don't realize that they're mismanaging it. If you want to survive, you need to integrate in the area, and you can't have just one big, just one person supporting you, because that person may go away. So this is why I'm a little negative on the prospect for the area, because I think that eventually support for such actions is going to wane, and then suddenly you have, things that are much more artificial than otherwise.
And we've already seen support for Israel, and by extension, the U.S. waning here quite drastically. We only have a couple minutes left here, and I want to come back to the word cloud that you all helped us out with. Let's show it once again, because there are so many issues that we still want to go through. There we go. We talked about geopolitics. I want to come back to one issue that you've written about extensively, and you've warned about it.
Yes.
The U.S. debt. You say the U.S. is in a death spiral. Why? Because
it's entering a death spiral. Okay. The numbers, without boring you with numbers, we issued a lot of debt when, during the last 15 years of zero interest rate policy, when government bonds were issued, and we're borrowing at 1%, 0.5%, sometimes overnight at 0.25%, and you guys are familiar with negative interest rates. We almost had that. So you accumulated a lot of debt. Now suddenly interest rates are 5% and going north. Okay, even if they stabilize at 3%, the interest on that debt will be something like 70% of the budget within a few years.
But I would argue no one cares. Everyone buys treasuries. The Chinese, they're buying treasuries.
Maybe.
We're not seeing a buyer strike
Not yet, but you don't want to depend. The problem is now we're in a situation where we can issue debt with impunity, because you have a customer, the Chinese, basically, you give them money, and with the profits they buy some debt. Okay, that's fine, and the retirees as well. But the problem is that at some point in time, when you enter the spiral, everything's going okay, you borrow with impunity, and then suddenly you're going to have to start overpaying for your debt.
But isn't that the real secret to growth? Something that we're missing in the EU, something we're missing in Germany, but also in Switzerland. We could be achieving much higher growth if we only allowed for a higher fiscal deficit. I
would argue the opposite. What I would say is the following: growth generated by debt is fake growth. Just like money saved by cutting some corners, risky. Money because eventually paid back, because basically you just take an economy, you borrow, you print some GDP per capita, and eventually you're going to pay the price. So the problem that we have in the United States is as follows. And in Europe, a lot worse, okay? But luckily Switzerland doesn't have a lot of debt. It's as follows. 15 years ago, the U.S., we're about, 18% of the world economy, and Europe about 19% of the world economy. That went down a few points for the U.S. and more for Germany and France and most countries except the Poland and a few. All right. So you have a drop in share of GDP. And China, if you use PPP, not raw prices, today is almost 20% of the world GDP. They're still growing. The last 15 years, China's economy tripled. The US went up 50%, and Europe, stagnation. So they can afford to have some debt. But the rest of, the mortals cannot, okay? So that's the problem that we have. We're building a system based on expectation of high growth. I'm not saying, the weird thing is that Europe is a much better place in 30 years, it's much more livable. I'm a cyclist, you have cycling paths, people live better, you have more opportunities for everything, you have more science. But the problem is there's no growth, okay? So.
We only have a few seconds left here, and I guess we agree to disagree on the growth versus debt versus deficit debate here, but we can continue that discussion later. What we're seeing in the markets right now, Nassim, is an everything rally, and you're a pretty successful investor and options trader back in the day. And I'm trying to get a feeling of, can this everything rally, can it continue? Because everything is going up, stocks, Bitcoin, gold, everything.
Yeah, but you got to realize gold is going up because the dollar has become suspicious. And it's the same reason why money is going to stocks. But let's look at it, separate stocks from the economy. The bulk of the S&P rally is AI companies, mostly NVIDIA. So it's not, if you look at half the rally this year in the S&P is attributable to these firms. So we're not talking about a broad-based rally, and we're not talking about great news that gold is rallying, okay, because it tells you that people are starting to lose
confidence
and lose faith in that magic. The magic touch of the West is under some suspicions, okay? And now we have an alternative, China, the next superpower. Because think about it, they make weapons, very cheap weapons, and they may be the superpower, and they may be the ones whose currency people will buy.
Nassim, it was fantastic to get your perspective. Thank you so much for your time.
I'm extremely honored to be here once again and drink Swiss water.
Thank you so much. Thank you.